Just shut up and send the deal to the bank and let them say no. That's the feedback that I got a lot on one of the videos that went live earlier today. And I totally understand where you're coming from. The video in question is me having a conversation with my salesperson about a young buyer that wants to buy a very expensive car. They are young, which means they have a limited credit history, which is okay. They could still have great credit, but again, they won't have very much history because you can't have credit until you're 18 years old. And your previous history is very important in determining your ability to get money lent to you in the future. These conversations that you watch in my office, what we're trying to do is make sure that our clients are set up for success with the best chance of an approval with favorable terms. And we also want to set expectations for the possibility of what might happen. What is extremely important in sales is not over-promising and then under-delivering. We would rather do the opposite. We want to under-promise and then over-deliver. And if you tell somebody, yeah, let's just submit it to the bank and see what they say, and then the bank comes back and says no, that is deflating and defeating a lot of the times for people. So we want to set it up as best we can. What you must remember is that when you submit to the bank, a computer looks at it first. It does not go directly to an analyst unless the computer doesn't like it. If the computer likes it based on the structure of the deal, which would be what is the person buying, for how many months, how much money down, what's the loan to value, which means what is the amount of money being requested versus the value of the thing that they are buying, the better all of that looks, the better the chance that the computer says yes. The computer is going to look at the algorithm that the bank has, and they are going to categorize it into a tier, into a certain bucket, and they are going to assign it a rate, and they ideally will approve it. If the computer really doesn't like it, maybe the credit's bad, or maybe the loan is ridiculous, maybe somebody's trying to ask for $150,000 on something that's valued at 100 grand, the computer might flat out reject it. And if that happens, an analyst can almost never go in and override that. If the computer is a little bit on the fence, that's when an analyst gets involved. Those analysts are graded on the loans that they approve, the ones that they say yes to. So they have parameters that they're going to follow, and now a human being is involved, and they may or may not choose to approve the loan. Obviously, the relationship with the dealership can definitely play a role there. We want to avoid the analyst if we can. So if we send in a deal too hastily, then the computer might score it in a way that the analyst, when they go to look at it, doesn't love, and you might shoot yourself in the foot and your chances of getting a deal approved. So these back and forths that you see between me and my sales team, I'm not being combative. I'm making sure that they understand the situation, that they've had the conversation with their client, and that they've set expectations properly so that we've got the best chance of delivering the result that everybody wants, which is we sell a car, the client's happy.